Overall, consumer price inflation has been persistently low since the Great Recession. Whether you measure it with the PC price index, core variations on that, like PC excluding food and energy, or the Dallas Fed's trim mean, those have all been less than 2% since 2012. How does healthcare services potentially fit in there? Uh, Healthcare services make up a big chunk of PCE. They have a weight of about 18% in the index, which is about the same size as housing and utilities. So, any big swing in the rate of growth of healthcare services prices potentially could have a big impact on the broader PCE price index. If you look at the rate of increase in healthcare prices, it's really started to slow around the early 2000s. Back in 2003, they were increasing at a rate of around 4% per year, and that pretty steadily declined till you get to 2015, where it's just 0.5% per year rate at which they're increasing. It's picked up a bit since then to around 1% on a 12-month basis now in 2016. But historically, it's really unusual. To me, the best way to gauge the impact of healthcare services on the current inflation picture is to compare current rates of inflation to their longer-term average levels, and then ask, well, if we take healthcare out of there, does that difference change? If you look at the all items index, so headline PC inflation, it turns out that taking healthcare services out doesn't make a great deal of difference. Current rates of inflation are well below average, whether healthcare services are in there or not. That mostly reflects the big decline in energy prices over the last couple of years. But if you look at core measures, if you look at ex-food and energy, or you look at the Dallas Fed's trim mean, taking healthcare services out of there really does make a noticeable difference. In both cases, current rates of inflation look much closer to their longer run average rates when healthcare services are excluded. That's a very different picture than what you see with healthcare services included.